What's up? Good afternoon. Well, quite the turnaround that we saw here in these old markets here. Interesting, but this is what you get when you have a lack of liquidity and too high of volatility. You get crazy moves, and it could have easily just have tanked, and of course we turned around. Doesn't matter what's going on in Spain and across the area over there with the power outage. And does anybody think that is by accident, or do we think that's on purpose? Do we think there's some funny business going on? Yes, it did. You might be surprised to see a couple of slides in there later today, sir. Anybody think there was any funny business there? The market is a bitch to trade. It separates them. It certainly does. I wouldn't be surprised if it was on purpose. Again, everybody forgets how much technology is out there, and everybody loves it until things get done, and we're not prepared for it. I mean, everybody remembers the Colonial Pipeline, don't you? Kid drove in the crowd is not even news. That's right. Killed 7 people, 7 or 9 people he killed, right? Fucking asshole. I'll tell you, this world is, and everybody blames Trump for everything. It's his fault. Whatever goes on, no matter what, it's his fault. But again, look, the markets, we assumed a rally. Okay. We assumed, and I still think there's another 3-4% to go in this market. Okay. They live hand to mouth. That's true. Okay. But again, I'm not surprised at the way the markets turn around. Again, you're dealing in markets that are lacking liquidity. Does everybody understand the lack of liquidity situation we're in right now? Because it's important to understand. It'll help you make decisions, and you may have to pause or wait longer to make those decisions. Power lines can't be harmonic distortion from intermittent power from solar and wind, which is different from power. Yeah, I agree. Okay. But look at the volume that you have, okay, and you still have relatively high volatility. I mean, it's not dramatically high as it was, but it is much higher than we're used to. I know a hedge fund guy says they're sitting on their hands, and I agree. I think that you have to look at certain spots, okay, and pick your spots. The captain picked a beauty today, which I'll show you later. It's all drawn out, and it was all called ahead of time. But again, I think you have to recognize, I mean, I can give you all the news, I can give you all the shit that's out there. We all know there's a lot of issues out there. But at the end of the day, okay, it still comes down to what you can see here. And when you continue to see declining volume, okay, and volatility is very high for the conditions that we're in. And again, the easiest one to benchmark it against is the SPY. The SPY has a volatility of about 28%, which is about double what it should be. Okay, it's about double what it should be. So if you're doing anything in these markets right now, you're looking to sell premium. Okay, you're looking for key spots to jump in, jump out. Okay, those somebody asked me today. We have that 2x2 by 1x2 on in the spiders, and somebody asked, did I roll it up? And I said, well, there's really nothing to roll yet. But if you want to turn that into a call spread, you could certainly take a short position in an open position that you already have. Okay, but quite frankly, again, there's a lot of things going on. But again, we're really lacking opportunity, and not because we're not doing anything right, but because the opportunities are not presenting themselves in the market. Does that make sense? I mean, you look at some of the markets out there, you look at gold. Okay, there's a reason behind gold, I think, which I'll get to later. But again, look at gold. I mean, this is like unbelievable. I mean, I think it's going to 2,700 still, but look at where it's at. Okay, again, it's up $60 today after opening up last night about 50. dropping all the way to negative territory, and then closing near its high of the day. Okay. So again, but look at again, I always, now we don't talk a lot of volume here. I'll point it out on occasion, but look at the volume. Okay, that is something that tells you that there is a lack of liquidity in these markets, and you get the swings become bigger out of nowhere. And that is something that you have to be prepared for. Okay. Again, we've got a big week this week for some news. You've got ADP jobs on Friday. I mean, on Wednesday. You've got non-farm payroll on Friday. Are they going to be good or bad? I don't know. Are they going to affect the market? I don't know. Okay. But I do know that as long as we remain in a market that lacks volume, what's up there, sir? That in a market that lacks volume and has higher volatility, you're going to have some problems here. The Nasdaq just turned out. Here we go. Here's the end of day explosion. This reminds me of last Monday, I think, right? Or do we tank last Monday? I don't remember. Okay, but here you go. Okay, so now they're running up, which is fine. I mean, because we're long, so it's not hurting us. But at the end of the day, again, this is out of nowhere. Okay, on very little volume, on volume that I wouldn't even trade. Okay, we look for in when we're trading the Nasdaq, we're looking for 10,000 contracts. Okay, we're not even getting 5. So where's the beef? Where's Clara Peller? How are we going to get through this? Well, again, how do you get through it? You get through it by sitting back and waiting for much higher probability trade. You have to trade less. You have to be more patient, okay, and wait for something to get away. Wait for a potential runaway, okay? And if you can't wait for that, then you should really walk away, okay? Why do you think the volume is so low? Risk adversity due to uncertain markets? No, I don't think that at all. I think, now again, here's my thesis or hypothesis, okay? I believe that most people if you make, let's put a number on it. If you make 250,000 or below, okay, and I don't know what the number is, but let's say 250, okay? I think those people that have jobs and have families are no longer investing in their 401ks or their IRAs because they don't have any money, okay? I think the participation I think market participants are way down because I think people that aren't set up right, we are a society that lives pretty much from hand to mouth for the most part. Not everybody, but a big percentage of our population. Okay. Does anybody disagree with that? Hedge fund guys said they think they can't risk getting blown out of a position by a tweet. True. Okay. So I think that, when you hear stats like the average person, the average family doesn't have $1,000 in the bank for an emergency. So how are they going to put money in their IRA? How are they going to participate in these equities? Okay. And then you go to someone who, and again, it's dumb not to be participating in your 401k because you're getting, let's say your 401k is 4 and 4. You put in 4, company matches 4. Okay. We are giving away 4% for nothing. Okay. Out of ignorance. Right. But let's say that, so if that money is no longer coming in the market, that's a big piece of volume because that's a bigger part of the population overall than anything else. Okay. But they say the wealthy 10% own, well, that's true. Okay. But if you take away the rest, if only the wealthy 10% are playing and you take away all the other people, that takes away the volume. Does that make sense? Okay. The sad reality is you have to risk capital and markets to grow wealth to combat inflation. Well, again, see, here's the other issue, and here's the real problem, is what people don't understand is that you have to invest your money. You can't hold it in your mattress. You can't hold it in cash because all it does is lose value every day from the fiat currency system, the criminal system that we live under. Okay. The battering down of the dollars and it's not just the United States dollar, it's all the dollars. What do you think really causes that much inflation. It's the devaluation of the currency. Okay. And again, I always refer back to the same time. If you're old enough, think about how much money you made in 1985 and think about how you lived in 1985 and tell me that you're making a lot more now and tell me you didn't live better then. If you don't hire 50,000 government workers every month who are forced to put money in the market, the liquidity will fall. Well, we don't have any liquidity right now, but again, that's what I think. Okay. So at the end of the day, okay, if you take out people that were investing, even if they were only equal to 30% of the overall volume, well, that 30% of the volume is gone. So if I look at the bigger picture and I go, okay, so if I add 30% to this number, that brings me back up towards normal volume, doesn't it? If I add 30% to this number, that brings me up closer to some more of normalcy. And again, so we're not seeing that right now. And again, I think that's the culprit. I think that banks are in trouble. That's my opinion. Again, it's not gospel, but I think banks are in trouble. I think the economy's in trouble. And I told you from when Trump got elected, okay, back in November, and I've said it almost every week, we are going to have to suffer some pain or a lot of pain before we're able to turn this boat around. Okay. And I don't even think we've suffered anywhere near the pain that we're going to have to suffer. Okay. And it's not Trump's fault. It is the fault of government itself going back 50 years. Okay. But if somebody finally steps up and says enough, okay, it's like Doge. Okay. How much have they actually cut of debt? I don't know. Okay. But let's say they've cut $20 billion. I mean, I don't know what the number is, but let's just say it's 20 billion. It's not enough. We have to find more ways to cut money. We have to fire and get rid of more government employees because the federal government was never intended to be the largest employer in the world. Okay. And I think that's what Trump is trying to do. We need to bring jobs back to this country and not the customer service jobs. We need to bring back real jobs. Now, somebody called me today and said they were all excited about AI and all how good it is. Do you realize how many jobs, how many people are going to be unemployed when AI, the more that AI comes in, the more unemployment we're going to get? Does that make sense? Okay. So again, if you're 20, 25 or 30, you understand a lot of this shit. I'm going to put the number at about 40 to 45. Okay. I know a lot of you at 40, 45 understand computers and the technology crap. I don't. Okay. But if I had to get a job, where would I go? Okay. Okay. If I had to go out and get a job, what would I do? Nobody would hire me. Okay. And that's my problem. Okay. Again, I'm not against technology, but what I'll tell you what I am against, I've said this to you before. You know how much power AI uses? Okay. I'll be a Walmart greeter. They wouldn't even hire me there because I couldn't work for that much. It wouldn't be worth the gas money to drive there. Hi, Bubba. I'm Walmart. Welcome to Walmart. Anyways, do you know that right now at current usage, AI takes about 10 times as much power as Bitcoin did? Okay. And everybody bitched about Bitcoin. And the problem with AI, it's perpetual, which means only one thing. We have to go to nuclear power. Okay. Well, I don't think it's investing in energy. I mean some energy, but I think nuclear is the only, in my opinion, once again, in my opinion, the only solution, if you want a green environment, if you believe in climate change, which I do not, but if you believe in it, if you want the most efficient energy at the cheapest price that will never run out and can support, you need nuclear power. That's it. Okay. Nuclear power. That's the end of the day. But of course, the morons, okay, the greeny morons, okay, they're afraid of nuclear power. Okay. Why? Well, I mean, the politicians are afraid because they can't steal as much money. And the idiots are afraid of it because, we had 3 Mile Island and whatever the other one was. Okay. Is that really what we should be worried about? Is that our biggest problem in the world, that there was a problem in 3 Mile Island? I mean, really? Is that what it is? And you should run it like the Navy runs its nukes. Yeah. Again, CCP paying them to say they are afraid. Yeah, I'm sure. Okay. Uh, like I said, technology, we're so far in front of that. And let me ask you a question in all seriousness. So what? Have there not been other major catastrophes? Is there not a major natural catastrophe going on right now in Spain? Is that not a major catastrophe right now? Life does not come without potential problems. Okay. Anyways, I know you're ready, Connie, but I will always ask, and how were the chocolates? Were they good? Were they good? All dark? Awesome. Okay. Oh no, you're my pleasure, darling. You deserve more. I got to send them more often now that I have my credit cards back. Anyways, the dollar. Okay. Again, look at the beat down in the dollar at a little bit of a rally, but here it is stuck in our range. We said 98 to a buck. Okay. Now, again, I'm going to say this again to remind you all that the Federal Reserve, the central banking system across the globe, they're all a bunch of fucking criminals. They are all stealing our money. Okay, now they want to take what, 2.5 billion and clean up the Federal Reserve building. Is that what I read? Is that what I saw? You know, I don't read a lot, but is that what I saw? 2.5 billion to rehab the Federal Reserve? Okay, which is a private corporation, by the way. Okay, which is a private corporation, by the way. So why should the government be responsible for redoing the Federal Reserve? Can you tell me that? Okay, unless they want to sell bonds, unless they want to sell collateralized, the collateralized debt. Hell if I know. Anyways, 98 to a dollar. But these, look, you've watched this for years. You want to talk about the key reason for inflation. It's about the currency market, the worthlessness of your dollars. Okay. All right. The euro currency still in consolidation. The opposite side, it's still in the same range you looked at. As I did say to you, I would be an automatic seller. It never got there. Okay. We're still just churning. Yeah, 113 to 115. Okay, 116, 113 to 116, excuse me. Okay. Um, the notes, a little bit of a rally today. It looked like they were going to soft and they popped. We're kind of mid-range right here. We did break out, and I said after the first time I would not be an automatic seller anymore. Now I'm looking at 113. Okay, and this is the reason I'm going to give you such a wide number this time. And this is for my money. It doesn't have to be for yours. Okay. But for my money, I'm going to sell. I have an order in now on the 10-year at 113. Okay, even. And because between what's going on, between the news and between jobs, the bonds could get a big move. Now I might get stuck up my ass. Again, this is not a guarantee of victory, but I'm willing to take that chance because in my mind, interest rates are going higher. Okay. In my mind, I can see things happening everywhere that tell me that interest rates are going higher, which means these will go lower. But right now, we're 111 now, has to be support. Okay. And to 113. 111 to 113. Okay. The bonds, they've come off a little bit, but not much. Again, right now, I would be an automatic seller at 118, which I am working right now. 118. I think you're 114 to 118 in the bonds. Okay. Again, they're really just churning around. They're really not doing much of all. But I am counting or hoping that there will be some dramatic movement off of the um, jobs numbers. And just for those who aren't paying attention, look what just happened. There you go. Now, if we were trading, we wouldn't have taken these trades anyways because there wasn't a volume, but certainly it made sense that they would pull back. And look what happened. Bang, 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 bang. Okay. In the meantime, Bitcoin, look at what happened. So it stuck around, it hung around 85,000, 85,000, 85,000. And what did I say last week? It looks like we're ready to break out. We were above the 200-day. It looks like we're ready to break out to the upside, and there you go. Okay. In fact, it broke out farther than even I thought they would go for the moment. I think your next resistance now is 100,000. Okay. I think you're 90 to 100. Okay. 90,000 to 100,000. Okay. Again, this was perfect action around the market. You're going to see a chart similar to this with a similar reaction that somebody put together for everybody. Okay. Gold, again, it looks, when you look at just the number, you go, wow. But then you realize that it was up to 3,500. So it still is really just reaching another top here. I would put 3,400 resistance, and I do have orders working at 3,400 to sell. I cannot change the 3,300 because it's sort of failed 4 days in a row to break down below there. Doesn't mean it won't break down there tomorrow, but it's failed. Okay. And I think if it gets through 33, probably 32 is next, just for those of you who might want to be a little bit more active here. I know we carry some spreads on, and so as other words here, and we did put a ratio on in gold today, by the way, for those who trade with me with CTG. But again, 33 to 34, silver, pretty quiet. Okay. But I think 34 is resistance. I think 32 is support. Okay. And it's really kind of quiet here. And once again, we're back well over 100 times. 100, the ratio, okay, is 100 times higher. Euro, Swiss, yen, all bullish. Yeah, well, they're all bullish because they're bringing the dollar down, and then it'll flip around. They'll all become bearish, and somehow, we the citizens will lose in the breakage. Okay, and our dollar will be worth less again, no matter which dollar you got. It'll be worth less because inflation will rise again. Platinum, we don't trade platinum, but again, it did close. It flirted very much like Bitcoin around the 200-day moving average. It did close well above it. Okay, so I have to use for now 980 as support, okay, and 1,000 as resistance. Okay, again, we don't trade it much, and I only trade the extremes. Okay, and typically I'm not as an aggressive seller of this. I would be a seller maybe at 1040. Okay. But I'd rather be a buyer right now. But right now, there's really not much to do. Okay. Copper, consolidation. So it came straight down as we thought, and we called it. It went straight up as we thought, and we called it. And what's happening now? Well, now it's consolidating. It's like 492 to 477. Okay. And it's going to break out of this one way or the other. Which way? I don't know. It's hard to have a good read which way this is going to break. Okay. I would think it'll break to the downside because I don't think very much of the economy, but that doesn't mean it's going to do anything. I think this is better. This is more one to observe right now until it commits. If you look at it over the last 4 days, it's had some swings, but it always ends up right where it started pretty much. You see that? Grains got pummeled a little bit today. Again, here you are back here. Now, we have no position in wheat, but certainly if any of those Chinese big buyers of copper, is that what you're saying? Is that where I was? Yeah, you know what? And they're also a big borrower. They can use copper. In China, you can use copper as collateral for lending. A very interesting dynamic that does a lot of stuff. And also, of course, China owns the London Metals Exchange. So very interesting. In the meantime, we have no position here, but certainly if you want to gamble, I'd be a buyer of wheat in the 520, 530. For right now, support is 530, right where we closed dead on support. Resistance is still 560. Okay. But I would be a buyer. If you were looking for a shot to take, I think this is a good shot to take. This is almost blow up type of activity. Certainly overdone. Tariffs or no tariffs. Again, I don't think this has anything to do with tariffs. I just think that you've had some sellers, and I would certainly be willing to be a buyer. Corn, which we do have a long position in, again, it's just doing nothing. It's very challenging right now. 470 to 490, even 480. Again, I don't see much to do in here. If anything, I'd attempt to be a buyer to the upside. This could almost be a cup and handle type of pattern. Again, I don't trade that, but I can recognize them when I see them. and they only work in an uptrend, which you certainly were in an uptrend. So we'll see how that plays out. Soybeans had a little bit of a rally through, all struggled most of the day. I still think you're looking at 1080 as resistance, 1040 as support. The only gamble, if I were going to do anything here, would be in the wheat market. And I meant to buy some today. I didn't forget. I got involved, and then of course it closes at 11 o'clock Vegas time. Cattle continues to run it up my ass. Okay, I did get short again, and again I'm obviously wrong. New all-time highs once again. Again, we don't trade it, but for me, I don't know. I get there's no stopping it. I would think the next somewhat resistance would be about 210, just on a whole number, as you know that whole numbers tend to hold. I think you're probably 207 to 210. Feeder cattle continues to make all-time new highs as well. I don't trade that at all, but certainly I would say that the next big spot would be probably 295 and probably 285 support. Hogs, well, there you go. Exactly as we suspected. Let me just change this so you get the better view of the chart that I'm actually trading and watching off of. Here, we got the V shape, a little bit extended. I'm looking to sell. I'd like to be a seller around 103 or so, 104. We'll use resistance at 103. And support is going to be around 98. Okay, and I would expect to see the opposite of what we just saw here. Okay, it's a nice move. We caught it, we figured it, we had it read, and now let's see what happens. Natural gas, a little pop to the upside. Okay, again, I said last week that this was very interesting. Now, it did try to close below, and it popped right above. We'll see. You're in a expect the action to take place around the $3 level. Okay, we're right now 330. I think 340 is going to be resistance for now. I think 300 or $3 is going to be support. But again, I think if you look back and you go back and you say, well, what happened in Bitcoin in this kind of pattern, in this action? Okay, all that action. You look back in any chart and you see the action is pretty consistent once it happens. Do you ever notice that? That everything kind of trades the same once it gets to those certain types of levels and around certain key areas, we start to watch how it trades. Have you ever noticed that? In crude, it's doing nothing. Okay. Reached right to where we thought, 64. Okay. I think it's 60 to 64. Not much to do. I think that's the human psychology of man investing through chart patterns. Could be. It certainly could be. Listen, no matter how much AI they put out there, no matter how much stuff they put out there, it's still human beings making a decision. Okay. So again, there's a lot of things going on, but there's nothing going on. Okay. And I think that's something that we have to recognize. And this is where you, the trader of you, the investor should not even be looking. Okay. If you're just an investor and you're hedged, okay, then you have nothing to think about. If you're an investor who is unhedged, you shouldn't be looking anyways. The worst invention in mankind for the average lay investor is the iPhone or the whatever, the smartphone. Doesn't have to be the iPhone, it could be any of them. The smartphone. Why? Because at the end of the day, you guys keep looking at that phone like it's going to change. And if you're thinking about selling, you're making a mistake. If you're trying to trade this market, you're making a huge mistake.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.